Get chatting with the management of Info Edge. Now, Info Edge stock price is up close to about 3.5%. The company's top line growth has improved. Revenues on a quarter-on-quarter basis are up 5.2%. This is the highest growth rate that we've seen in the last 8 quarters. That's 2 years. And on a year-on-year basis, the company's revenue growth stands at 9.5%, and standalone billings too have gone up by 10.8%, which suggests that perhaps this 9, 10, 11% kind of revenue growth will sustain in the subsequent quarters. We have with us the management joining in to talk more about how the individual verticals have also fared. Margins, though, remember, have declined a bit on a sequential basis on account of higher ad spends on account of IPL. Hitesh Oberoi, CEO and MD of Info Edge, is now with us on the show. Hitesh, afternoon. Thank you very much for joining in. Good quarter. There is a recovery seen in your main core business, Naukri, and even the other businesses are doing well. Your cash losses from non-recruitment business have also come down on a year-on-year basis. What can you guide for Q2, Q3, Q4? What is it that you're seeing on the ground?
You're absolutely right. I'm pretty happy with the performance last quarter. Our non-recruitment businesses particularly did very well. So we were able to reduce our cash losses. Growth was also reasonably high. We were able to grow most of them in the mid-teens or more. In the case of the Naukri business, which is our main business and which generates all our EBITDA, growth is slowly coming back. The worst is perhaps behind us. IT hiring, which was very slow for about 5 or 6 quarters, it's slowly beginning to pick up. Some green shoots there. April and May were actually very good, but perhaps there was some uncertainty around the elections in June, which resulted in a slow quarter towards the end. But our JobSpeak index, which we publish every month, which talks about how job listings, etc., are doing on the platform, was up in July. So fingers crossed, and let's see how things play out going forward. It will be hard for me to say what will happen next quarter, but clearly we're targeting more growth, higher growth than Q1 in next quarter.
So Q2 growth should be better than Q1. Your cash losses from non-recruitment business are down to 16.5%, down 73% on a year-on-year basis. What are you targeting here, say by the end of FY25, Q4?
We have 3 non-recruitment businesses in our operating portfolio. There's Shiksha, there's Jeevan Sathi, and there is 99 Acres. Jeevan Sathi had a particularly good quarter. We were able to get it to near break-even. And this business was losing about 30 crores a quarter 2 years ago. From there to almost breaking even. It's been a very good performance in the matrimony business, and we are hoping to keep it at break-even levels going forward. In Shiksha, growth was very strong, and Shiksha now generates a profit. It generates cash on a quarterly basis, and we are hoping that we can grow it, continue to grow it at least 18-20% going forward. 99 Acres also, we have managed to reduce our burn significantly over the last 18 months. It still loses a little bit of money, but we are growing quarter on quarter. Our traffic share is growing. The usage of the platform is growing. The real estate market continues to be buoyant. Of course, in this business also, we saw some uncertainty in the month of June. Perhaps it had to do something with the elections. But the real estate market continues to be reasonably strong, and we're hoping that growth will, 99 Acres will also grow faster going forward. Let's see, fingers crossed.
Can you turn cash profit from your non-recruitment business by the end of, say, 3 quarters? Is that possible?
Well, I mean, we would want that to happen, but whether we'll be able to make a profit or not will also depend on how aggressively we want to invest in these verticals going forward. Clearly, like I said, we will target break-even in Jeevan Sathi. We will target to make a profit in Shiksha. But in 99 Acres, a lot will also depend on competition and competitive intensity. And if we see an opportunity, we will not shy away from investing more in the business. And if that means that profitability gets delayed, I mean, that's so be it.
All right, so you are looking to invest in a lot of these businesses, etc. Hitesh, just before we got to you, we were talking about some of these new age companies as well. Zomato was one of those conversations, one of those stocks that came up in the conversation. I'm looking at your market cap. Your holding in Zomato is now nearly 1/3 of your market cap. With the kind of investments that you've lined up for all the other businesses, etc., and the kind of surge that we've seen in Zomato, does it not tempt you to maybe take some money off the table in Zomato, use that to fund these investments? Is that on the cards?
Well, all I can say is if we had taken our money off the table 2 years ago, 3 years ago, 5 years ago, and we've had this discussion several times, then maybe it would not have been such a high percentage of our market cap, right? Because Zomato has, sort of surprised everybody. They have executed to near perfection, and they have a huge opportunity in front of them. And we believe in the management team. They are clear leaders in the markets they operate. So why sell something which is doing so well for you? But having said so, ultimately the board decides, and whatever the board decides is what we will do. But we don't want Zomato to be 1/3 of our market cap or 30% of our market cap or whatever. We would want to grow the operating businesses much faster. It's not that we want Zomato to go down, but we want the operating business to grow faster so that they can become a large part of our market cap.
No, the reason why I ask this is I'm not saying that you sell entirely and exit and don't look at the upside, etc. But as a proportion of your market cap, it has continuously increased because of the outperformance that it has shown, and because you don't want it to be that big a proportion of your overall market cap, it may tempt you to take some percentage off every once in a while and use that to grow the operating profit of all your other businesses as well.
The truth is that we are sitting on 4,500 crores of cash, or close to that number. And the Naukri business generates about 1,200 crores of EBITDA every year, right? And our other businesses are now close to breaking even. And like you said, hopefully they will start turning EBITDA positive soon as well. So, unless and until we find good use of the cash, there's no point in sort of selling Zomato, which is executing well anyway.
Hitesh, many more questions, but out of time now. We look forward to another conversation. Thank you very much for joining in. That's Info Edge for you. Perhaps the worst is behind Naukri. The non-recruitment business is also growing very well. And for now, they're going to hold on to that golden goose, the goose which is laying golden eggs for them. That's Zomato. The stock moved up, post numbers. It's currently up close to about 4%.